If you look at just about any company's balance sheet, you'll see something called accounts payable. Accounts payable is a liability, and it represents amounts owed for goods or services that the company has purchased on credit. So, for example, if a company buys inventory but it hasn't yet paid for the inventory, it would record accounts payable. Now, accounts payable is typically categorized as a current liability, and it's sometimes referred to as trade payables instead of accounts payable, but they mean the same thing. Now, in terms of the mechanics, when you purchase something on credit, the company is either going to debit an asset account or an expense account, and then they're going to credit the accounts payable account, which again is a liability. So let's do a couple examples. Let's say a company has some repairs done and they debit repair expense for $200 and then they credit accounts payable for $200. Again, this is a liability and it's going to increase the company's total liabilities and probably going to be categorized as a current liability. So they've incurred an expense, but they haven't yet paid for it. They have promised to pay at some point in the future. Now, the second example, we are debiting an asset account. We're debiting inventory. So I'm assuming this company uses a perpetual inventory system. Okay, so they're going to debit inventory when they acquire inventory, and they're going to credit accounts payable to record the fact that they have not yet paid for the inventory. Okay? Now, if the company used a periodic inventory system, it would be similar, but they would debit the purchases account instead of the inventory account, and they would still credit the accounts payable. Now, at some point in the future, the company is going to pay the supplier, right? Here, they acquired the inventory and they said, hey, we'll pay you later. When they in fact pay the supplier at a later point in time, they would debit the accounts payable account, which would reduce the liability, and then they would credit the cash account, reducing total assets.